Hi, Joe Solari here. And as I promised in session 2 of the business of writing, I wanted to go through the spreadsheet with you and give you an opportunity to really understand how I put it together. So I'm not going to show you a lot of tricks in this one. This is going to be very basic and just going through each section fairly quickly and showing you why they're there and the information that they're going to provide to you. So let's get started. Okay, let's dive into this spreadsheet. Let's first start out down at the bottom with the tabs. So you have the Writer's Business Tracker. This is a 12-month spreadsheet for you to run your business off. You can use this no matter where you are in your writing career. Even if you're just starting, it's a great place that you can capture numbers. And if you do that as your business scales up, you'll get a lot of benefit out of this and seeing how it is scaling. The next tab is the cash flow graph. This is tied to that business tracker, and it helps you to see how your cash flows are going out and coming in. If you watched video number 2 of the business of writing, you've heard us talk about this launch trough and how you have to plan to get through a launch trough. And number 3, this tab is what we call the writer's business model. It is exactly the same as the first tab, and it is to be used for you to build out a business plan. So you can start out by writing what you expect to do as far as book launches, how many a month. Maybe it's not going to be every month, it's going to be every other month. And you can then go change these numbers to what you think they're going to be and have a model that is associated with your writing plan. You would do whatever you set in here for as far as how you build this out. Once I walk you through the tracker, you'll understand these sections and have a feeling for how you would fill these things out. So let's now go talk about the parts of the business tracker. Okay, so let's talk about tab 1, business tracker. Up here we've just got a note that we're telling you we're running this business on a cash basis. What that means is that we're accounting for revenue when we actually receive that revenue, not when it's booked by the seller. So in the case of Amazon with the 60 to 90 day lag, we may see the sales in Amazon, but we don't actually collect them until 60 days later. So up here is your sales area. If you're going wide, there's some other spaces here where you can put in some other platforms where you are selling, and you build out your sales revenue. In the case of the first line, it is connected here. So if a number changes here, it will change here. I would suggest you build these out manually. So just go right in and type out numbers. And do this even if you're just starting with your first book or you haven't even published a book. Start using this sheet to collect your costs. So let's talk about the next section, which is costs. And as authors, we should think of our cost of goods sold, or COGS, as your editing cost, your covers, your formatting, and your marketing. Now, in this particular sheet, different than one in session 2, I've taken out the formatting cost of $100 per month. And down in the operating cost area, I've added in $250 to purchase the Vellum software. Before I talk about operating costs, let's focus a little more on your cost of goods sold. What you see here is what we call gross profit, and that is your revenue less your cost of goods sold. In the beginning months here where we don't have any revenue, the spreadsheet can't calculate it. But as we go forward, you see the gross profit margin improving and kind of stabilizing up around this 80%. Those are great gross margins to have. Most businesses don't operate on those. But out of that gross profit has to come any additional expenses, including your taxes and any salary that's coming out of the business. So let's talk about the next section, which is operating costs. We've got a list of operating costs here. Some of the typical ones you see in a business. Of course, there's more. And what you decide to put in here can change. You can always change these to other things. I would make sure that it's not stuff, but you're being as detailed as you possibly can and capturing things in the appropriate categories. And if you know it's something that works to be a monthly bill, it gets phoned for $10. You can bring that across and you can see it picks up all of that data. And we're cascading this down to our eventual holy grail, the cash flow. Now, there's a section here on taxes, on payroll and payroll taxes. We'll revisit that later. But after expenses, you see they total up here. And these are all deductible, I shouldn't say these are all 100% deductible because meals and entertainment's 50% when you go to your taxes. But all of these are going to be items that are deductible from your business expenses, which would include, depending on how you set up your business, if you follow some of the things I'm going to talk about and set your business up in a particular way, your payroll and your payroll taxes will be deductible from the business's tax liability. So the next thing we get to is what's called EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Well, as we go down through our coursework, you're going to learn what EBITDA is and how it is a way for you to measure the true value of the business you're creating. Right now, pretend like it doesn't exist. We'll get back to it, but it's built into the spreadsheet already. Along with that, we were talking about this is the earnings before those items. Now here's those items. Interest, this would be an area where if you have interest on your credit cards that is associated with your business, that interest is deductible and you would put it in here. Taxes, this is a question we get a lot, is how do I determine what my taxes should be? So if you are making more than $400 selling books, you need to report that income and you need to pay not only the applicable state and federal income taxes in the United States, other places I can't really comment on, but you also need to pay what's called self-employment tax. So there is an additional tax that you have to pay, which covers Social Security and Medicaid benefits and unemployment, that is due certainly on the federal level, and it may also be in a particular state. There may be another charge. So you'll total those up and put that in this box. So let's say it's 30%. And you'll see that it then, when you have profit, it calculates it on a monthly basis. And here you see your net operating profit after tax. So this is what you actually made cash-wise into your business after paying all of the above, including your tax liability. So the next section we're going to talk about is the cash flow. And cash flow is critical. It's the lifeblood or oxygen of your business. Without working capital, your business will get into trouble. You won't be able to pay your bills. Even if you're having good sales, if the timing of your cash flow isn't correct, you could be in a situation where you have a significant amount of money coming down the road, but the bills that have collected today put you in a position where you're having to reach into your personal finances to do. And what we would like you to do is think about this like an investor. Let's figure out what you need up front, determine that initial capital, put it into the business, and operate the business off of that. That way, what we can do is for the investor in you, we can look at what the return on that investment is. So let's walk through the cash flow. There are different components to a cash flow. If you want to learn a lot more about this, you can go to my book, The Business Owner's Compendium, and I walk people through cash flows. I have a different sheet that I use for everybody that's a cash flow that works on 52 weeks, so it's for a whole year. But let's stick with what I've put together for you guys. You have your cash that's coming in when it comes in. You have your cash that's going out. Those two are summed together, and you see what your monthly cash flow is. In this first month, you have the situation where your initial capital is being pulled into that. Then your final number here is your cumulative cash flow. So as you can see from the changes that I made, the amount of money that I need to operate this business is more. And we can see that on our spreadsheet. It's gone negative here. So there is, a simple way that I will show you here where we can just figure out how much it is by putting in more money and seeing, okay, that gets us to zero here. So I would now, if based on this kind of model I just slapped in here, I now need $1,300. The next part of this page is return on investment. You hear this term thrown around a lot. The return on investment on your advertising, the return on investment on a book. I want to get you to the point where you're really comfortable talking about return on investment and measuring return on investment. The concept of return on investment is if you put in $100, what do you get back? Now, in a lot of cases, what we're measuring is what we call cash on cash return. So if I gave $100, did I get $200 back? So my original $100 plus another $100. So what I'm automatically calculating here is your cash on cash return for the year based on your initial investment of $1,300 and what ends up to be about $4,000 in cumulative cash flow. The thing about cash on cash is it doesn't take in the function of time. So cash on cash, whether this was 1 year or 100 years to get to that number, 4,000, it's still a 2.2 times return on my cash. The other measurement is called IRR, or internal rate of return. This brings in a time function. So this is really what we should be thinking about more often is what's the time value? And in this case, if I put $1,300 into this business, my initial investment, and 1 year later, I had a return of $4,186 in cash. And remember, this is after we've paid Uncle Sam his $2,200. You would end up with a 222% internal. That's pretty crazy. It's a really good return. Now let me show you one last function here. There's some others I've got hidden I won't talk about yet, but here's one that we've had a lot of questions about. What should I pay myself? Well, one of the things we talked about in video 2 was before you start throwing in a bunch of expenses, you should attribute some amount of money back to yourself. And I talked about 10%, but let's say it's 15% of whatever you make, you're going to take out of the business. So in this case, you see that any month that we're profitable, it starts to take out that amount of that monthly sales. And the resulting amount is about $1,000. Now, one thing you'll have to do is make sure that you adjust your tax rates here appropriately. So in the case of you having an S Corp and paying yourself on a W-2, you would actually have your payroll tax number here for your federal and state taxes. And this number probably would drop. Let's say it would be percent. But these two numbers now, 218, 1,400, would become your tax liability. And remember, the way I've designed this spreadsheet is this. That cash is allocated. You'll have a difference in your balance in what you see in your bank account than what you see here. And the difference will be these numbers, the 3,800 versus the 1,200, 220, 218. Those will add up to what should be sitting in your account. And what you're doing is you're accruing that tax liability to be paid either on a quarterly or annual basis, depending on how much. And we'll talk about that in the tax section. But this will be a very powerful tool for you to make sure that you're allocating the cash for your tax liability. So remember, once you make that sale, as far as the government's concerned, you have that tax liability. They give you time to pay it, but it's still, from that point forward, you're on the hook for that. So I hope you found this really helpful. Again, we'll be visiting this sheet more often to help you guys understand fully how to use it and really to make it something that when you decide to work in it or when you have to work in it, it's easy and you might laugh at me, but fun. And we've designed it in such a way that it's minimal. It's only doing what it needs to do to keep you on track with your business, and you're spending most of your time right. I hope you found this helpful and keep checking in. Don't forget to subscribe. Please leave comments. I will continue to reply to those, and it helps me to understand where you are as a group and what I need to spend more time. I really believe that we are in a golden age of content creation, and as individuals, you're going to be in a position where you can take your imagination and turn it into cold hard cash. But in doing so, you're going to have to pick up some additional skills beyond some of the other things that you've had to do already, learning how to market and learning how to format books. Now you're going to have to learn a little bit about business. We're going to help you get there. It's going to be certainly educational for you. Please don't be daunted by this. We'll get you to be able to do this stuff. You've done a lot harder things in the past, such as writing a book or learning how to ride a bike. So we'll get you to where you need to be to run your business. Have a great day.